Hey, Wealth Warriors. Are you ready to redefine wealth and master your money mindset? Welcome to Women of Wealth. I'm your Gen X host, Holly Woods Gray.
And I'm your millennial host, Ali Ramo.
All right, Women of Wealth listeners, today we have a powerhouse guest with us, Deborah Daniel. She is a seasoned CPA and the founder of a full service accounting firm, Charter Accounting. I think I didn't put the accounting in the notes, but I got it. She's not just about the numbers, she's about transformation. Deborah has been an entrepreneur for 30 years. She helps business owners, entrepreneurs, and professionals understand their finances, maximize their opportunities, and step into true wealth building.
Today, she's here to share with us something really exciting, the big, beautiful bill. What it is, why it matters, and how it can benefit you, your business, and your family. So grab your notepad because you're going to want to take notes. Welcome to the show, Deborah. We're happy to have you.
I'm glad to be here. Most people don't think that the money part of business, or certainly the tax part of business, is a sexy part. But the extra money in your account that you can spend on whatever you want to seems pretty sexy to me. So that's why I like talking about this topic.
Absolutely. So funny. I was just talking to somebody because, we do insurance, and insurance isn't usually the fun topic. Because when you think of like an insurance agent, you probably think of my grandpa. Yes, a tall, gray haired man with a big old briefcase, But we're putting the fun back into money and into insurance. And we're going to do it today by talking about some of how you've been educating people on this big, beautiful bill. Can you explain what it is and why it matters right now for them to have some understanding about this?
This is super new and super timely. I think it was signed actually on July 4th. Congress did it right before they took off for their summer break or whatever. And I think President Trump signed it on July 4th. I mean, this is probably one of the most comprehensive tax law changes in the 3 decades I've been doing taxes. Think about that, 3 decades. I mean, we've had the tech bubble, we've had the 2008, we had the pandemic. I mean, just so many things have happened financially, but this bill really, I think we're going to see some really, I don't want to be political by any means, but when we've got certainty, money loves certainty. I mean, it gets a little confused and scared when there's not certainty. And a lot of the tax law changes that happened from the last big change in 2017 were set to expire at the end of this year. So how do you, here we are 4 months before the end of the year. How do you make decisions about your business, about next year, about 2 years, about 4 years from now, if you don't really know what the playing field is going to look like? So that by itself makes it significant because we have got some things that are in place at least through 2029, some things that have been made permanent. That's huge. Again, money is scared of not knowing what's going to happen, right? People can't make decisions when they don't know what's going to happen. So when we have clarity just by itself, if they didn't do anything besides just make some of the deadlines permanent, it would have been huge. But they also threw in a lot of goodies for all of us. There are some big winners in this bill, a few losers. I mean, because they got to pay for it somehow. But to me, I mean, I'm just a student of economics, a student of money. My undergrad was in economics. I love that whole marginal utility and all that kind of stuff. But the reality is, I mean, back from the old days, certainly before Allie's generation, in the Reagan years and the whole trickle down, economics, it really is. If you stimulate the people who are making the money, it does trickle down. And I'm certainly not against programs that help the lower tax brackets, but if you give someone that barely can keep their lights on extra money, they're probably not going to spend it in a way that then gets recycled. Like when I make more money, I can send my daughter to a better camp, or I can send her to a dance school. And then those businesses now have more money to cycle around versus somebody that's just like, okay, great, we can actually have groceries today. That doesn't do a lot for increasing the economy. So this bill really did make some changes that impact that, especially for business owners. I mean, it affected personal as well, but I would say the business owners are the real winners here.
Awesome.
Can you give us some examples of how it's positively impacting business owners?
Well, sure. I do. I don't want to, not give any props to the individuals, because there are a couple of good things that are real brief that I'll tell you because they're easier. One, tips. If you're a hairdresser, a bartender, anyone that gets tips, you can make up to $25,000 of tips tax-free. That's huge. That means even at the lowest tax bracket, you just say you made 25,000 in tips, you just have an extra $2,500 in your pocket. That's real money. That really does something. Overtime up to 12,500 for a single person, $25,000 for married filing jointly. Obviously, it creates a little bit for us as business owners some administrative headaches a little bit because we're going to have to track it a little bit differently, but still that's extra money in our employees' pockets. It's not really costing us money, right? Seniors are big winners in this bill as well. The standard deduction for seniors went up $6,000 per senior, so a couple could have as much as $12,000 more dollars in extra non-taxed income. That's just the free money that's out there. That's just money that now you can make. And those are just some of the examples, the most obvious and biggest examples of that. But that also goes around to being a business owner, because now there's more disposable income from these people who are our customers that can now spend more money with us and not give it to the government to spend on whatever it is that they spend. Again, not being political, but we're not really sure where it goes once it leaves us. So we want to be in control of what's going on. But for business owners, some really cool things. One thing that came into play not that long ago was this thing called QBI, Qualified Business Deduction. It's section 199. You don't have to get into all the weeds of that, but basically business owners can have up to 20% of their income be tax free, which that's huge. So that means if I made $100,000, 20,000 of it's at zero. I mean, you don't get better than zero, right? So that has been made permanent. That was supposed to expire. They actually had in the bill the thought that they were going to increase that to 23%. That didn't make it in the final, but we know that now at least we do have the 20%, and there is, I think the door's open for it to be a little bit bigger down the way. Also, some businesses were not eligible for that. They have loosened up the requirements of who could use that as well. So that's a big win. The 100% bonus depreciation was made permanent again. It had been 100% several years ago, and it went down 80%, 60%. But that means if you've got to buy equipment, or you need, I mean, some cars, some of the like fleet vehicles and heavier vehicles, that's 100% write-off. So if you've got to, now cars have gotten so crazy expensive since the pandemic. I mean, I see clients coming in here with just regular cars at $70,000 or $80,000. I'm like, oh my gosh, who gets a car these days? But now all of a sudden, if you're going to use it for business, you can write that off, right?
Hey, Deborah, can I jump in right there?
Sure.
Yeah, so Allie's husband happens to be in the car business. So how could we use this as like a real life opportunity? Because for example, when the CARES Act came out, there was that bill about the farm equipment and all that, and it had to be a 6,000-pound vehicle, and it had to cost over $50,000 or something like that. So I ended up getting my car during that time, and I was able to write off 35,000 of that car because it was over 6,000 pounds. So him knowing that as a car salesman, would he be able to educate his people who own businesses that use vehicles? I commute every day to schools and all that kind of stuff. So the majority of my car is used for business. Would he be able to educate somebody on that to where not only is it going to help his business grow, but also help his clients get that information?
Sure. I think that's definitely like one of those trickle down kind of things. I mean, knowing more about it so that if your customer is someone that's impacted by it, I think you're like, well, hey, that doesn't really impact me. I don't get to drive back. I just go into the auto dealership every day. I can't write off my mileage. So why do I care? But you do care if your customer can take a benefit from it. And then even not just that, of course, if you use your vehicle for business, we've been able to write off interest for a while as another business expense. But now I don't know what kind of cars he sells, but now if your car is manufactured in the US, some of that loan interest is now deductible. So if I've got $1,000 payment that before it cost me nothing to drive around in my, not business use vehicle, and all of a sudden I could deduct up to $10,000 of interest a year, that makes even a personal vehicle, more attractive. So I think, if I was a salesman, I'd probably be like saying, okay, I need to call all my past customers and say, you need to upgrade.
Right. That's really good. That's really good, practical advice for somebody who's not necessarily in the conversation, but they're on the outside looking in. That's kind of what we like to do, with our company. We like to help people with these tax credits. So you and I will be talking more about that, I'm sure, going forward, but definitely, I think that's such a great impact.
Well, I think that's a valid point in that it's not always you're like, oh, business owners. But the thing is, it's if you're not a business owner, you're business owner adjacent. You know somebody, your neighbor is one, your spouse is one, your cousin is one. I mean, we're all impacted, and the reality is small business is the engine that runs this economy. So I mean, when small business wins, we all win, and that's just a fact. I mean, we could quantify it on many levels, I'm sure.
Absolutely. Were you going to say something else, Allie?
No, I mean, it's interesting. I didn't even hear the loan or the interest write-off part. All I've been hearing about is the EV, and so they're trying to get EVs out of the out and sold because of the deadline coming up.
That's a little bit of a loser, right? I mean, so pretty much clean energy is pretty much a loser on this list, because we had just gotten some really, okay, on the EV. Actually, my husband just bought an EV because he wants the credit. I mean, we needed a new car, and he said, I'm going to take advantage of this or whatever. I said, please just don't get one of those, cyber trucks, because they're ugly. But but a lot of people around me drive those. But so he benefited from that, but that expires September 30th. So you've got like 2 weeks, 3 weeks, very short little window of when you can take advantage of that. But it's not just that. A lot of home energy credits went away with this tax law. So they had opened it up in the past couple of years where you could get a $1,500 credit every year for better, more energy efficient windows, more energy efficient doors, new HVAC. I mean, now we're back to the old rules where it was like $500 lifetime, and that doesn't in my house, that wasn't even one window. So it didn't do it. That's not going to do very much good.
Right.
Again, there have to be, I guess they have to have some losers to make up for the winners.
Which is interesting, right? Because we had, when this big, beautiful bill was first getting talked about, Elon was in the driver's seat on some of those changes. So it's interesting how big of a loser that is going to be for some of the people who supported in such a big way to get this bill through. And again, I'm sure he's going to win in so many other ways. It's not even.
I'm sure. And I 100% always speak with the voice of money. I mean, sometimes it feels like you're being political when you think from a money standpoint, but to me, I love the green initiative, but I also don't feel like people that aren't, the problem with giving all those credits for one particular industry like that, whether it be green or whatever other industry gets the nod, is people that aren't taking advantage of that industry are kind of paying for it. And to me, if green energy is so great, let it be economically viable on its own. You know what I'm saying? I mean, that's just the economist in me, not, red state, blue state, whatever. It's just, does that make sense for other people that aren't taking advantage of a particular industry to support an industry, and our tax law support that?
So we talk a lot, or you and I have talked a lot in the past, and I've been on some of your webinars and whatnot. You always talk about starting the planning now for like next year, right? What are some ways that the women listening to this show, what are some ways that they can avoid the mistakes of not planning soon enough? Like, how can they avoid, making mistakes this time around, considering the fact that some of these laws are changing and whatnot?
Well, the thing is, they're changing, but the urgency to be thinking about your 2025 tax bill in 2025, not in the spring of 2026, is the same all the time. Now we just have a couple more bells and whistles, but the reality is most people have a tax preparer, not a tax strategist. There's a big difference there. Because, I mean, if I'm just seeing you, or whoever's doing your taxes is seeing you in February, March, April, we're busy as can be, and we're just trying to crank those suckers out of there. And it's not the time to be doing any big, I mean, maybe I could tell you how much to put in your retirement account, but most of the stuff expires December 31st. If you want that bonus depreciation, you got to buy that vehicle in 2025. If you want some of these other, there's lots of charitable strategies that I have for a little bit higher income people, got to do it by the end of the year. And so the bill even just makes it more urgent, because we've got some, we're going to miss out on a whole nother year, because it's not so bad if we don't talk until January and implement some of this stuff in 2026, but you lose that deduction you would have gotten for 2025. It goes away. It's kind of like I own a commercial building. If I have a tenant that isn't there and I sign somebody up on January 1st, I can't say, oh, well, you know what? We had some empty space in 2025, so I need you to pay for those 4 months that were empty. It's the same thing. If I wait until 2026 or, every year, you've just lost that opportunity. But one of the things that everybody should do, new bill or whatever, is look at what I call kind of the minimum structure that a business owner should have. Do you have the right entity? Should you be a sole proprietor? Should you be an LLC? Should you be a S-Corp? And or should there be multiple entities? Because sometimes layering those entities creates a little bit of paperwork and a little bit of things that you have to do. But if I could tell you that doing this one thing would save you $10, $15, $20,000 on the exact same, tax situation, income situation, wouldn't you be willing to have an extra tax return or, form an extra LLC or whatever? Those are things we got to do now. Then, to me, how can you shift income among your family members a little bit? So hiring your kids. I have job descriptions for my clients' kids starting at, I've even done it lower, like if they want to put their kids on their website or bring them to, I have one person that does spices and she brings her homemade spices and she brings her daughter with her to the trade shows. So, even though she's under 10, she's going and she's doing it, but any child over 10 can file, can, do, these young people, I need mine to, program my phone for me or whatever. There's a lot of things that they can really do for us, but then and people are like, I don't want to pay my kids, but the thing is, you're already spending a lot of money for your kids anyway. So my kids were in competition level dance or travel baseball. Those things cost thousands of dollars a year. So all we're really doing is shifting income to their account, like a real employee or whatever. And then we're using that money to pay for stuff that we already did. But if I shift $15,000, $15,750 per child, which is a standard deduction, they get it for zero. And if I'm in the highest tax bracket between federal and state, that could be almost half. So I've just saved $7,500 for the family. That pays for a lot of other stuff. So we've got to look at those shifting opportunities. I'm seeing that also on the other side. Like I help my parents out some economically every month. I know a lot of my clients now because our parents are living longer. And unfortunately, they kind of, this is a whole nother political conversation, not money conversation that I'm sure you have, Holly. People that are a little older than us, they kind of got the rug pulled out from under them. And we're told, oh, by the way, you're not going to have a pension. You got to start saving for a 401k in your 50s. And they didn't have a chance to really save enough money. So a lot of our older people are running out of money and needing to be supported by their people our age and their what I call pre-retirement age. And so what if we can get them on the payroll and shift some income? If I got to help them anyway, why not? So that's huge. Shifting of the income and shifting of the timing. What about capital gains? We need to be looking at your stock, even if you have, I'm not certainly trying to be anybody's stock person, but if we need to have a meeting with your stockbroker and look at what kind of, what are the numbers in there? Are there some dogs that we need to sell and go ahead and take the loss? And then we could also offset some gains that we have, because even if you want to keep, say you have NVIDIA or whatever, everybody likes to, all these great stocks, and you want to keep it, if you sell it and you don't buy it back for 30 days, you can actually offset those gains against some other losses that you have. Too late to do it in January. Can't do it in January. And what if your income this year is going to be lower? And maybe we should talk about some Roth conversions because this year's income is lower. I love that, especially for seniors, because a lot of my seniors, we're looking at that every single year and trying to figure out how do we keep you in that lowest bracket? Well, guess what? With a $12,000 bigger standard deduction, we just made it a lot easier to convert $12,000 in a year, right? So
actually 36, right? 36,000, right. Because that would be the tax.
12 more than last year. You know what I'm saying?
Yeah.
To do it at zero, I'm saying that 12 actually pays for some other stuff. But if you wanted to move 12 at zero, you've got a bigger standard deduction, 12 more income, 12, zero, no extra tax. Because I don't know about you, Holly, but I am a huge proponent of Roth conversions. Most people I know make a little bit too much to actually contribute, and even if you could $7,000-8,000 a year, that's not going to keep me in the style I've gotten accustomed to. But converting our stuff that we had from before, take the tax bite today. But even if we don't get the benefit of it, because we're getting it tax-free in our 70s, 80s, or 90s, our kids get it for tax-free. So there's so many opportunities and juicy bits when you're looking at it, but it's too late once we get to January 1st. Then we're talking about 2026 strategy.
Yeah.
So Deborah, to go back to, how is your business elected and those kinds of things, how is the conversation started? Like if you had someone in your office and they were thinking of becoming an LLC or an S-Corp or something like that, and they started to do the paperwork. I mean, I kid you not, I had a phone call today because our CPA was not wasn't even offering strategy. Like never, we would ask, "Oh, can we do this?" No, but never explained why, and then
Or
never
what the
offered,
other option would be.
and then never offered, "Hey, after tax season, let's talk." So how do you have those conversations? Are you actively telling your clients, "Hey, as a new business, let's set up an appointment for middle of the year to have these kind of conversations," so that you can set them up for success the following year?
100%. I'm much more proactive than a lot of people. And I'm not to slam my industry, but it is so intense. I mean, this upcoming season will be my 34th tax season. Hopefully I don't look old enough for that. But I mean, your life is tax returns, basically from January 1st until April 15th. And a lot of people are just exhausted. I fortunately have a great team that helps with a lot of the keying parts. So I'm able to stay up in the cerebral, thought process a little bit more. But I do really encourage people to see me after tax season. I send out emails all the time, but I will tell you, even as much as I'm an advocate for it, because it's so like not thought that it was necessary. Or on the other side of the coin, some people think, well, my CPA is taking care of that for me. But really, if you're only seeing that during tax season, that's all you're really having is a tax return done, right? I mean, it's kind of like if you go and have some lab work done and I see that you need to have surgery, but you don't come to me for the surgery, we're done with the lab work, right? So the tax return is kind of the lab work. And then we need to do the surgery or the further, protocol afterwards. So to me, when somebody starts a business, we have that conversation. Where it really makes sense, when you're first starting out, sole proprietor is fine. LLC, I love just to have a little bit of, risk protection around you a little bit. But the numbers really start making sense. I call it the sweet spot where you're making $75,000, $80,000 net a year. I mean, because the thing is, there are extra costs in doing some of the strategies. One, you got to have more entities. One, you've got to have more administration. You've got to, pay a little bit more in fees or whatever. So you're like, I don't want to just have somebody do the extra strategies just to cover the cost of us doing it, right? But when you get to that $70,000, $80,000 number, it's probably starting to make sense at that point to look at the multiple entities, to look at the structure the right way. And what I do when a new person comes in is I actually do a review of their last 3 years tax returns. And then I kind of overlay what I would have suggested and tell them the difference. And most people are like, oh my gosh, I just overpaid $30,000 over the past couple of years. A few things we can go back and change, very few though, because remember that expiration date for what we're going to do for 2025 is December 31st. So we can't go back and say, oh, I'm buying a car in 2023. Let's put it back on my tax return.
Right. So let's talk a little bit about, I mean, you kind of just covered that, but let's see. What advice, with your experience running a full service firm, what advice would you give entrepreneurs to make sure they're not leaving any money on the table, like with new opportunities like this? So one of the things that you taught me was about having having my team trainings at my home so that I could take advantage of the green jacket tax credit.
Yeah, the Augusta Rule, yeah. From the masters. Exactly. Yeah, I love self-rental. I mean, and just so in case you don't know what Holly's talking about, her company can actually rent from her husband or my husband and I, our residence, for a sales meeting, for a customer appreciation event, in lieu of paying rent to someone else or to a hotel to have those events, we can actually rent our personal residence to do that, right? Well, the company deducts the rental expense, but if it's less than 14 days, and we're going to make sure it's less than 14 days, none of that income has to be claimed on our tax return. So say it was even 14 days at $1,000, right? I mean, and honestly, I've had some clients do some checking, and they come up with bigger numbers. I mean, I'll give you all the little tips and tricks of how do I determine how much this is worth. But say it's just 14,000. That actually, most of us are going to be saving about a third of that between federal and state, maybe as much as 50%. That's huge. That's another $4,000, $5,000, $6,000. I mean, all these can be stacked on top of each other. And so you see how even a company making, $100,000 to $200,000 of net income could literally save $20,000, $30,000, $40,000, $50,000 if they're doing those things ahead of time. But how do you really position yourself for that? You've really got to change your attitude about money in general, and taxes too, that this is a profit center, right? I mean, this is not just I'll just drop my stuff off to Deborah and kind of quietly walk out of the office and say, please don't call me with a big tax bill, which is what, most people are doing, you really need to have an ongoing, we're partners in this, right? I don't get a commission from IRS when you pay more. I wish I did, because I've got a lot of high income clients. I could take just a little shave off of that. It'd be really nice. But the reality is I don't make money. I don't make more when a client pays more to the IRS, right?
Right.
Wouldn't that be great?
It would be super great, because I have some really smart and savvy, very, very high income clients.
So Deborah, what's the first step someone should take, whether an individual or business owner, if they want to see if they can qualify for some of the benefits from this big, beautiful bill?
Well, so I would say the first thing is to, get someone, me or your current accountant, and just review those last, sit down and I want to, sometimes you have to be proactive. Sometimes your doctor doesn't call you and say, hey, are you having a pain in your elbow or whatever? You come in and say, I have a pain in my elbow. So you need to say, I'm looking at my stuff and I think I'm paying too much in tax. So let's look at the last 3 years, me or anybody else, and see where are the gaps, what's going on, where are the opportunities. The reality is there's not a lot of opportunities if you only have W-2 income. There's a few cool things, but they're automatic. There's no planning to, make more in tips. There's no planning for the overtime, right? You're just going to get a better rate on that. I often say, and no matter how people are religious, most people agree that Jesus was a miracle worker. And I often say, if you have a W-2 income, even Jesus could not, perform a miracle on your taxes. But that's not 100% true if you want to do some of the more advanced kind of things. There's charitable programs. You can form a private foundation. There's an equipment leasing where you could get bonus depreciation. There are things, those don't, again, make sense for folks that are under maybe like $250,000 or $300,000 in a W-2 situation. But when you start hitting that, there are several things that we can do to reduce those taxes as well. And I think that's kind of a lifeline for W-2 kind of employees, because I really do feel like they're pretty much getting the shaft here. This is the income, this is how much you owe. And that is true unless you want to get a lot more involved with your personal finances than just, getting your paycheck at the end of every 2 weeks.
Right. And what about for business owners? How would someone get a hold of you? I know you've been doing some webinars lately. I know you have an ebook about this. What are some ways that our listeners could get in touch with you and maybe do some of this pre-planning before the beginning of the year gets here?
The best way to get in touch with me is my website, which is deborah.daniel.com. And I have, if you go to the page resources, Deborah.Daniel.com's resources, I always have, I think still the webinar that we just did is up. If somebody registers for that, even though it's past, they'll get a replay of the webinar. I have a guide on how to keep yourself audit proof, which is always kind of good information. And then I think I have a link to the ebook there as well. But once you get in my ecosystem, I'm sending out educational stuff all the time, right?
All the time.
I think Holly, you're on my list. I think it was less than a week after the law passed that I sent out my first blurb. Here's my first pass. These are the things that are making a difference, right? And so really it's a matter of that. And then on social, I'm at Deborah Daniel CPA on all the platforms, basically. I've been a little quiet on social because I've been so busy doing the work, but I am going to get back out there again, because it really is about educating. I'm at a place in my business 3 decades in, if people come, they come, right? I'm not chasing people down, but you have to let people know what you're doing, basically. And so I feel like I've kind of been really focusing on my own like ecosystem of the people I already have. But I feel like there's a bigger conversation and a lot of people that don't have access to someone that's talking about this. So I am going to get a little more active on social again.
Well, actually, you just gave me something to think about and to talk to my husband about when I get home tonight, because I haven't gotten one email from our CPA that we pay thousands and thousands of dollars to each year about any of this information that you're talking about. But I've gotten 1 or 2 a week from you, and then I went and did the webinar. So what am I doing here? Like, why am I investing in someone who's not investing back in me? So I'm gonna talk to Bobby about that. I'll let you know what we come up with, but it might be time for a call, because honestly, like, all I feel like for me to do Pinnacle again, we had like these things that I had to do in order to not be a burden on our pocketbook, right? Because it's not a cheap investment for Pinnacle. Right. And so one of them was whenever the taxes are due, whatever, I just kind of write the check without complaining about it, because I just hate writing the check. I write check every single month to pay for some of our taxes. Like, why do I have to continue to write these checks, right? But I know why.
But
you don't have
I
to
love that. I mean, the thing is, to me, I have no problem. I don't know what the whole thing fair share means, but I have no problem spending money on tax if it's the least amount that I can actually pay.
Exactly.
So, I want to pay tax because I mean that means that I'm being successful. Because I mean, if not, why not just stay at home and I don't know. I'm not ready to retire yet, but I mean, I don't mind paying taxes, and nobody does. I mean, we need, somebody has to pay for our military and keeping us safe and the roads, and I'm not sure what else I get, but anyway, but we don't want to pay more. I mean, that's
exactly.
And the reality is, think about it from this perspective though, too, Holly, and it just blows my mind when you really think about it. If I have $100 telephone bill that I have to make, I have to sell more. Forget even the cost of it, just to cover the taxes, right? So if I'm paying between federal and state, let's just say 30%, which most successful business owners are paying more than that, I got to make $1.30 for every dollar of expense. That's a lot. Yet people are chasing down the revenue. I mean, they're like, what do I do for another revenue? Do for another revenue? When I mean, this. I mean, it doesn't really matter how much money you make. It's really how much money you keep, right?
Yeah.
So if you focused even a fraction of the time you spend on the next, launch that you're going to do, or the next marketing thing, or the whatever on the top line, which, not to get too business schooly, but, the revenue that comes in, what about what's coming? What's really staying with you? And I'm not talking just for me so that I can have a nicer car or buy a new house right now, but what about for my kids and my grandkids, if I ever get any of those, and just legacy and the things that I care about. It becomes about impact at that point. What charities can I support because I'm not overpaying on my taxes? What can I do to make my parents in their last years more comfortable because I'm not paying extra in taxes? It becomes so much more than just, great, I paid a smaller tax bill or whatever.
Right. Yeah, for sure. All right. Well, we have a lightning round, and we are at the lightning round. So, Allie, why don't you jump into the lightning round and let's hear what Deborah has to say about this.
Yes. And before, I just want to make a note to those who are listening on audio only. Deborah was talking about a sign behind her that says keep more money. So because you said this, and I'm like, well, I just want to make that announcement for those listening audio. All right. So Deborah, we've got some questions that are just short answers. First one, what word best describes your leadership style?
That's a good one. I actually thought about that a lot when you said it, but I would say really visionary more so than I'm more of a leader than I am a manager. I cast the vision and hope that people can jump onto that and get on my bandwagon. Managing is a little hard for me. That would probably my biggest downfall over the past 3 decades is managing the people, but I can cast a vision like a crazy person.
I think Holly could agree on that, right?
Yeah. I mean, that's why we get along so well, right?
What's your go-to productivity task during tax season?
100% has to be time blocking. I live and die by my calendar. If it's not on the calendar, or if the calendar gets messed up, like I actually had someone I was supposed to meet with at, I thought 1:00 Eastern today, which was for, the time that but they had it down for 1:00 Pacific. I mean, that totally messed me up. But it's the time blocking, because if you keep getting in and out of tasks, I mean, there's all kind. I mean, this whole thing, and Holly, this is probably not maybe for you, Allie, but we were kind of taught this whole multitasking was like like the live and die success feature. The reality is we know our brains cannot handle more than one thing at a time. And if somebody walks in and interrupts me when I'm working on a tax return, I mean, it takes like 30 minutes to get back to where you were. And so time blocking is so huge. And I think that's something that most of us don't do enough of.
Yeah. All right. Coffee or tea?
Coffee. I like tea as well, but I got to have my coffee in the morning. But I was a late coffee bloomer. I didn't really like coffee until my 40s.
Oh, wow. Favorite business book or podcast you recommend?
I really have not been listening to many podcasts lately, but I would say The Woman of Wealth for sure. But of course, but there's several books that I like, and I always kind of default back to, because I think it really is the little things like The Compound Effect, which is an old, kind of a classic these days, or The Slight Edge. It's really it's the part. Everybody does the basics, right? Those books kind of talk about how the little things over time make a big difference. And I think that's true because I'm such a proponent of that on your money. I mean, don't wait till you can win the lottery to start saving. $1 today, or my daughter, she's still in college and she has a huge Roth IRA already because she's been working for us and we've been contributing to the Roth every year. That money is worth so much more. So if you could do it early and do little things along the time, I definitely think that's kind of my jam.
Yeah, I love that. A money myth you wish would go away forever?
I think it relates back to a little bit what I was saying, that just making more money will solve all your problems, because it's really, I mean, they're like, if I could just have more, if I could just get that promotion, if I could just get more money, if I could just get that bonus, that doesn't solve your financial issues if you're letting it just go out the bottom as fast as you can do it. If you don't have a system to save and pay yourself first, I mean, you're always going to be chasing that next dollar of revenue. So I think it really is. I think most people are really confused in that if I could just make more money, I'll be okay. It's really, I think, more the backside that makes more difference.
Yeah. If you could sit down and have lunch with one woman of wealth from the past or present, who would it be?
I was thinking about that. So who came to mind was like Sarah Blakely, the Spanx founder, or Oprah. I mean, both of them came from fairly modest backgrounds and were able to create something really huge. And I personally relate to that as well quite a bit. And I think that the people that, have had to, you don't want to say everybody struggles, but I admire anyone that has bootstrapped it, because I know when I started my company, I basically started at zero and have just kept going and just never thought it wasn't possible. And I think that's a lot the way they were.
Yeah, that's awesome.
Well, thank you so much for coming on our show and sharing your expertise with our listeners. We really appreciate it.
Well, I mean, this is, it really is such a, it's so silly to say passion project, but to me, the whole money thing is so important, because I just don't think, life isn't about money. Business definitely is, but from either perspective, when you've got the funds to do the things that you want to do, it makes everything easier. So we can't say that that's not true. Money does make the world go round. And if we can educate people about them, help them to be able to use it better, that's a good day for me.
Well,
yeah, absolutely.
We can tell you're very passionate about this and you're an expert in what you do. So maybe there's going to be a part 2 later on, because I feel like you could talk about this forever.
Yeah, definitely.
For sure.
So I just want to remind everyone who's listening that you can reach out to Deborah at Deborah Daniel, no S, just Daniel.com. And we will put that in the show notes so you can get in contact with her. She gave you some free resources that are available. And I just wanted to once again say thank you for being here, Deborah. And for those that are listening, thank you for joining the Women of Wealth podcast. If you loved today's episode, be sure to subscribe, share it with a friend, and leave us a review. Until next time, keep building wealth, your legacy, and your life of impact.